One of the things I always look for in my investments is a way to have my cake and eat it too. For fintech companies, this means making money from online transactions as the world goes digital, and having physical point-of-sale solutions as physical stores open back up after the pandemic. For artificial intelligence companies, this might mean building the software and the hardware themselves instead of having to rely on third-party vendors and a broken supply chain. But how do you have your cake and eat it too when it comes to Bitcoin? The answer? By investing in cash flow generating companies that mine it. Want to know which Bitcoin mining company I think will beat the rest? My name is Alex, and I'll show you by looking at the science behind the stock. So the Bitcoin miner I want to focus on in this video is Cleanspark, ticker symbol CLSK. Full disclosure, I've been a shareholder of this company for about 2 years now, and I buy and sell the stock a lot because its price is so volatile. So this is a high risk stock. I'm not a financial advisor, and all I want to do is put this company on your watch list by explaining why it's on mine. When I first invested in Cleanspark, they weren't focused on Bitcoin at all. Cleanspark started out as an energy management hardware and software company focused on installing and optimizing microgrids. Here's what that means at a high level. The electric grid is made up of power producers, power consumers, the wires that connect them, and the control systems that actually route the power. A microgrid is the same thing, but on a much smaller scale. Usually a small number of buildings, a local energy source, and a way to store that energy, and a control system that ties everything together. This control system lets the microgrid do a few different things. When the main grid is working normally, the microgrid just looks like any other consumer. When the power goes out though, the control system flips a switch, and now the microgrid is running off the power that it generates and stores. When the power is inconsistent, the control system can balance out the power by offsetting it with energy stored in the local microgrid. And when energy costs the most, like on hot summer nights when everyone is running their lights and their air conditioners, microgrids can opt to use their own stored energy or even sell their excess energy back to the main grid at peak prices. As our power grid gets older and we experience more natural disasters, these microgrids could be the key to taking the uncertainty and the volatility out of our power availability and the prices. Cleanspark has a few products and patents that unlock microgrids for everyone. They have energy modeling software that uses machine learning to predict a microgrid's future energy usage. Then it makes economic forecasts based on current weather patterns and power demand patterns on the grid. With that data, they can optimize how that microgrid stores, uses, and exports power to maximize uptime, minimize costs, or anything in between. So, for example, a residential area can focus on lowering its energy costs, while a hospital or military base can guarantee that their power won't go out. These smart power systems are hardware agnostic, which means they can work with clients that already have some energy solutions installed, regardless of the vendor. That's pretty different from most of Cleanspark's competitors, which make you buy their entire end-to-end solution. These smart microgrid solutions used to be Cleanspark's entire business, but now they account for just 10% of their total revenue. That shift really began pretty recently, in December of 2020, when Cleanspark acquired a Bitcoin miner called ATL Data Center. The initial goal of that acquisition was to have a full-scale demonstration facility that shows how to integrate renewables into different power-hungry applications, like big data centers, and Bitcoin mining. So now Cleanspark's whole business is about applying their decentralized energy solutions to decentralized finance. Before I can explain what makes Cleanspark's shift from energy solutions to Bitcoin mining so interesting, I need to explain how energy relates to Bitcoin in the first place. Don't worry, I'll keep it short and sweet. Bitcoin transactions are validated by a consensus mechanism called proof of work. This is how nodes on the blockchain agree on the exact record of valid transactions and ensure that no one is spending their Bitcoin twice. Proof of work is done by Bitcoin miners solving hard cryptographic math problems called hashes. You must pass exactly the right transactions through this hashing algorithm to get the same exact output as every other node on the chain. If you change just one transaction on the list, even by a tiny amount, the output hash would be wrong. If that happens, you wouldn't get the same answer as the rest of the network. So your answer would get rejected by the rest of the network, which means you just spent a lot of energy for nothing. Every few minutes, this proof of work consensus mechanism picks a random winner from the miners validating transactions on the network. Your chances of winning depend on the amount of validated work you did compared to everyone else over that block. So miners have a big incentive to only include real transactions. That winner records their version of the latest on-chain transactions into the next block and is rewarded in newly minted Bitcoin. Every 4 years or so, the Bitcoin rewards get cut in half, which makes Bitcoin harder to mine and makes it appreciate in value over time. So if you want to reliably mine Bitcoin at scale, you need a lot of beefy computers to solve these hash problems very fast. That speed is measured in hashes per second. So one thing we can do is look at the current hash rates and market caps of some of the major North American Bitcoin miners. If we go to the hash rate index and sort these Bitcoin miners by their hash rate, the top companies in the US and Canada are Core Scientific, Riot Blockchain, Marathon, Bitfarms, Hut 8, and Cleanspark. One issue with this list is that it mixes Canadian and US dollars, even though a Canadian dollar is about 79 cents. So what I did was recreate this table with today's numbers, convert everything to US dollars, and then subtract the Bitcoin each company holds from their market cap. That way we get a better sense of how much each company is actually valued based on their ability to mine Bitcoin, not the assets they already have on their books. Let me walk you through one example. All of the mining rigs at Core Scientific add up to a hash rate of 8,300 petahash, or 8,300 quadrillion hashes every second. That's a lot of hash. Core's market cap is around $1.2 billion, so you're paying around $140,000 per petahash. That's what this top table is showing for each Bitcoin miner. The second table does the same thing, but without the Bitcoin on each company's books. So Core Scientific holds around 8,500 Bitcoin today, which is worth around $270 million. So their market cap without that Bitcoin is around $900 million. That makes their valuation per petahash much more attractive, at around $110,000 instead of $140,000. Using these same metrics, Cleanspark is pretty cheap in terms of market cap to mining capacity, both with and without their Bitcoin. But Cleanspark is different in one key way. They're willing to spend their Bitcoin to keep growing instead of holding it forever. That's why the amount that they're holding today is so low. This is both a good and a bad thing. It's good because they actually sold their Bitcoin at much higher prices, so they don't need to dilute their shareholders nearly as much. It's also a bad thing because as Bitcoin gets harder to mine over time, each Bitcoin becomes worth way more and more over the long term. So if you're a Bitcoin maximalist, you actually might want to stay away from Cleanspark. The last thing I want to point out here is that Cleanspark has one of the lowest costs of mining, which means they have one of the highest profit margins per Bitcoin. Not bad for a company that just entered this race last year. Electricity actually accounts for over 80% of those costs, so efficiency is super important. These computers take a lot of electricity to run, and you need even more electricity to cool them. And that means the most profitable Bitcoin miners not only maximize their hash rate with powerful computers, they also need to minimize their electricity costs. Well, Cleanspark has patented energy solutions for doing exactly that, and as a result, their break-even price on mining Bitcoin is somewhere around $6,000 after everything. That means as long as Bitcoin is trading above $6,000, it's profitable for Cleanspark to mine it. After this latest huge crash, Bitcoin's price is hovering around $30,000 today. So these high margins are what caused Cleanspark to shift their energy business to mining Bitcoin in the first place. But unlike holding Bitcoin itself, these Bitcoin miners act as a cash flow generating, leveraged version of Bitcoin with the convenience of being a stock. So going back to what I said in the beginning of this episode, that's how you can have your cake and eat it too when it comes to Bitcoin. And I really think that Cleanspark's industry experience of building energy infrastructure at scale really sets them apart from other Bitcoin miners. Now that we have all of that context, we're in a good spot to take a look at their most recent earnings presentation and then talk about their risks. Here's everything we've talked about so far summed up in one slide. Cleanspark's vision right now is to be one of the top 5 North American Bitcoin miners in terms of hash rate, sustainability, efficiency, and profitability. They currently have around 80 megawatts of operational Bitcoin mining, but they're expanding that by another 530 megawatts, which equates to a 650% increase in mining when it's fully built out. They're doing that to maximize their hash rate relative to their competitors, because that lets them validate more blocks and earn more Bitcoin for every megawatt they spend. Cleanspark currently represents around 1% of the total global hash rate, and mines around 10 Bitcoin every day. Since they have a long history with distributed energy solutions, they're developing a roadmap for making their Bitcoin mining more sustainable. That way, they can be a leader when it comes to environmental, social, and governance, or ESG. Another cool thing about Cleanspark is that even before their pivot to Bitcoin mining, they've been pretty good about not diluting shareholders except to fund acquisitions that they think will quickly add more value than they cost. They're usually really good about communicating that value to shareholders. Now that they generate about 10 Bitcoin per day, they can choose when to sell some of that Bitcoin to help fund their business. Cleanspark has the flexibility to do what's best in the moment based on market conditions. Here's a deeper look at the total Bitcoin that they've mined so far, since they acquired the ATL data center in late 2020. Cleanspark ramped up from around 42 Bitcoin in January of last year to 305 in January of this year, which is a 7x in the amount of Bitcoin that they've mined per month. Just a couple months ago, Cleanspark signed an agreement with a company called Lancium to secure 200 megawatts of renewably powered data center capacity, with an option to secure 300 more. About 50 of that initial 200 megawatts will be operational by the end of 2022, with the other 150 coming online by spring of 23. So, by spring of next year, Cleanspark's exahash rate should roughly quadruple from where it is today, from around 2.4 exahash today to around 10. Then, if and when they exercise the second option for that additional 300 megawatts of data center capacity, that would bring them to a total of 20 exahash of Bitcoin mining power. College Park is the ATL data center that they acquired, and it's in Georgia. Norcross is another data center that they acquired, and it's also in Georgia. And these co-located facilities are the racks that they have with Lancium in Texas. So one thing I'm definitely watching out for is Cleanspark acquiring more and more data center capacity to keep ramping up their Bitcoin mining rate. Cleanspark's revenue 5x'd year over year. This huge increase came from a 5x in their Bitcoin revenue and over a 3x in revenues from their energy solutions, but that's largely driven by a recent acquisition of a company called Solar Watt Solutions. Their revenue stayed largely flat quarter over quarter, and that's because even though they mine more Bitcoin, Bitcoin's price fell from around $45,000 in quarter one to $30,000 today. That's what's causing their gross profits to come down from last quarter as well. They have more and more computers coming online to mine Bitcoin, which increases their overall power bill, but Bitcoin's price is falling, so their margins per Bitcoin are shrinking. Keep in mind that Cleanspark doesn't sell 100% of their Bitcoin at the same price or in the same quarter that they mine it, which causes the accounting for mining Bitcoin to get a little wonky. These differences end up showing up as markups and markdowns in their net income. Basically, what's happening is that they record Bitcoin's value when they mine it, and again when they sell it. If they sell it for a lower price than when they mine it, it shows up at a loss. Bitcoin was worth around $45,000 last quarter and around $30,000 today, so it's a net loss per sale. If Bitcoin goes back up, we'll see the reverse, where Cleanspark mines it at a lower value by holding Bitcoin as it appreciates. Either way, it seems these big shifts in net income are coming from the volatility of Bitcoin, not the management of the business. They close out their earnings presentation by showing you what I just showed you earlier, that they're the 5th biggest Bitcoin miner in terms of hash rate, right behind Hut 8. But they have a much lower market cap. And going back to my table, which just has the latest market caps, Hut 8 is about 70% more expensive per unit hash rate. So, by dollars per hash rate, Cleanspark is really undervalued today. Now, let's talk about the risks. There are real risks to investing in this company. First, Bitcoin can definitely go much lower and keep squeezing Cleanspark's margins. Even though their break-even price on Bitcoin is something like $6,000, they could keep having to write down everything they mine quarter after quarter. Doing that while spending money on growth is going to keep making their short-term financials look pretty bad. And we're obviously not in a market that tolerates that, which is why Cleanspark stock can be so volatile. When Bitcoin drops, Cleanspark drops even harder. Another risk is what's happening with their energy business. On their most recent earnings call, their CFO said that their payroll expenses increased by about 90% quarter over quarter, and that's because of severance. They're paying severance packages, including stock-based compensation, to the people that they're letting go from their energy segment. They could be doing this for a couple of reasons. For example, they could be letting people go from the energy side of their business to reduce their overall cash burn while the market is being tough on growth stocks. Or they could be legitimately getting rid of the entire energy portion of their business to focus exclusively on mining Bitcoin. Will this mean that they're also getting rid of their patented microgrid technologies? They didn't say during the earnings call, they only said that all possibilities are still on the table. If they do get rid of these technologies, I'd be very interested to see what company buys them and what that company will do with them. I also wonder what that would do to Cleanspark's energy efficiency on newly acquired mining machines, and if they'll end up paying more for electricity as a result. Remember, electricity costs dominate the OPEX for Bitcoin mining. Another big headwind would be another chip shortage, which could be very possible given the current state of the supply chain. That's a headwind for their competition too, but we'll see if Cleanspark can navigate those challenges better than their peers, especially if they get rid of the people with all the experience dealing with that kind of infrastructure supply chain. And as I mentioned, Cleanspark is currently behind the top competitors in terms of pure mining power and in the amount of Bitcoin that they hold today. As Bitcoin gets harder to mine, the amount each miner holds starts to matter more and more. So Cleanspark spending their Bitcoin today could end up biting them if they don't close that gap before the next time the mining rewards get cut in half. The next halving for Bitcoin should happen in around 2 years. But Cleanspark has been doing a great job closing that gap so far. So there you have it. When it comes to cryptocurrencies, investing in Bitcoin miners is one way to have your cake and eat it too. You get the exposure to the price action of Bitcoin while still holding a cash flow generating stock. Cleanspark is one such Bitcoin miner, with a solid combination of profitability per coin, low market cap compared to their mining power, and a willingness to spend their Bitcoin today instead of diluting their shareholders. They have a plan to scale their mining operations by a factor of 4 over the next 12 months, and nearly double it again after that. Their stock is super volatile, but this is the cheapest I've ever seen it. That's why Cleanspark is near the top of my watch list right now. Want to know what other high growth companies are on my watch list? Check out this episode next. And if you think I've earned it, hit those like and subscribe buttons to let me know that you enjoyed the science behind this stock. Thanks for watching, and until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.